This is Joe Baker with Trade Pilot Pro, doing your nightly market analysis along with your intraday trading levels on the S&P 500. We have a bear flag formation in the overall market, and I want to kind of point out how you may tackle this as far as understanding where this market's going. To a broader degree, this has been kind of a difficult market since July 24th, I believe, the last week of July. We look like we want to break out, we break down. We look like we want to break down, we break out. We look like we want to break out, we break down. Okay, so it's one of these. It's I would say it's more than whipsaw because it's the ranges are so big. I'd call it more like whiplash. Okay, and again, this is why I mentioned last night, please respect my line in the sand numbers. For those of you that don't trade the S&P, just make a note of them and jot them down so you see. Yesterday's number was it 03 or something like that. And it didn't even get over that all day at 1303. And I don't think we got over it all day. So I was never looking for higher levels all day. Okay, so you're always on the right side of that trade. Had it broken over, yeah, I would have been looking for higher levels. So you have to understand, you're consistently looking for short setups when you don't get above that area, and then above the area looking for higher levels. So, that being said, like I said, just respect the levels, and because they are big levels, and other traders also are looking at them, and larger traders know they're there. How do you play this market? What I did is I did the big area numbers for you, and to tell you what type of trading range we're in, because the range, or the trading channel, I should say, is what's most important, and it's always on the close. It's not the intraday swing highs and swing lows. Those are important to us as traders because those are areas that we look to come back down and retest. And if it's on lighter volume and we have some divergence there, then we can go ahead and go long. Or to the same thing on the top side, we like to retest those areas for short setups. So the swing highs and the swing lows throughout the day are one thing as a trader. But if you're position trading and you have a portfolio and you're watching this just to kind of get an overall view of what the market's doing, it's always the closing price that really matters. We can always get outside of a channel, get right back inside the channel, and as if nothing happened. You know what I'm saying? At the end, it's always a closing price that's most important, is what I'm trying to say. Okay, so a close above the 1292.50 puts us back into this range upward of the 1316. A close above the 67 area puts us up to the 1292.50. A close above the 50 area puts us up to 67, and the same to the way down. A close below the 92.50 area puts us heading down towards the 67 channel, and then underneath the 67 down to the 50 and the 34. This is about the channel within the range that we've been in through this whole bear flag formation. So that's why I'm trying to give you a heads up as the big area numbers. You probably should jot these down because these will probably be, unless we get a real strong move that wipes them all out, they're probably going to be numbers that will be in play for the next several days, if not the next week. Above the 1316 area, obviously I'll come back, we'll revisit this. I can tell you now it's going to be upwards of the 3130 area, okay? And that's just based on the chart formation. We do have divergence to this upside as far as our volume oscillator and our money flow I had pointed out last night. So this is the overall market. This is what it looks like. I would be looking to short this if this was an intraday pattern, though these ranges are huge. We did keep short pretty much today in the room anyway. We never did get over that line in the sand. So this is basically setting up to roll over, albeit once I say that, the market can rally 400 points next day. So I just, with oil being, tanking and so forth and so on, just be careful in these markets, folks. Just be careful. Over to the intraday pivots, and here we are. The line in the sand is 1291. Above 1291, unfortunately, we've got that bugger of a number, the 1292.50, because that's a big area there. And then we've got 1297.50 for the breakout, 1350, 1304.75, 1307.75 with an ultimate target of 1310 and an extension of 1314.50 to the upside breakout. Then underneath we have 1288, 1285, 1281.25, 1278, 1274.75, and this is a little bit stronger of an area. The 1281 and the 1278 are not that big of an area. I don't think they would be worth counter trend trading those. I think that would be best served kind of just holding through those areas. They are not strong. They're there and they should be noted, but they're not that strong. The 1274.75 is a strong area, and then ultimately a swing down to the 1272.25 area. Remember, folks, you are all welcome to come in and join us in our intraday S&P trading room, where we trade the markets live, and I do education commentary throughout the day as well. And all you have to do is send me an email. We will get you a passcode. You can come in and join us for the week. And if you want to get these levels, okay, if you want to get these levels emailed to you so you can print them, you have to go to the blog and sign in where it says sign up for our daily newsletter. Okay, that goes into an email database that I can attach these to. We are working on this currently to get it all formatted and so forth. However, I do need the email addresses to send these to them. If you no longer want these sent to you, there'll be an unsubscribe button once you get them that you can just unsubscribe to them anyway. So if you want them, just head over to the blog. It's over on the right side. Just go to the bottom of the bio area and you can click on it'll launch you right over to the blog, and you'll see a white knockout where it says sign up for the daily newsletter, and you'll get these so you can print them if you do want them. All right, folks, I will talk to you tomorrow. And again, good trading. Be careful. Take care.